Hello and welcome to today's NinjaTrader ecosystem event, How to Build a Market Scanner. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader brokerage using the phone number or email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking Get Started under the Welcome section. Before I turn the mic over to Frank, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these trading suggestions are not a solicitation or a recommendation, simply educational in nature. Thanks again for joining us today. And without further ado, it is my pleasure to welcome to the NinjaTrader room, Frank.
Thank you very much, Chris, and welcome to the webinar. It is my pleasure to be here and to be invited by NinjaTrader. And thanks, Chris and his team, for preparing everything so fluently. And before I jump into Ninja to actually build what we're going to build here today, I'd like to just share my screen here with you and ask you if you can hear me and see my screen well. If you could type in a yes, thank you very much. Okay, so here we go. A few pieces of information here about our company and about myself, and also just a screenshot of what the end product will be, hopefully, after we build this Market Scanner Pro. Just in a nutshell, if you're new to Ninja or perhaps Remek, we have been NinjaTrader partners since 2014, and it's been a real pleasure to celebrate our 10 years of cooperation. We have been making software for the NinjaTrader platform for a little bit more than 10 years now, and thousands of licenses sold, both indicators and strategies. And if you go to remek.ca welcome page, you will see all the testimonials, true, unsolicited, real-life testimonials from customers who have been happy using our products. I also want to mention our T-Rex, which is our most advanced algorithm we've ever built. We call that ProSTRBT. RM just stands for Remek Momentum because this is what we trade. ProSTRBT is a self-learning. I'm reluctant to use the word self-learning. Maybe next year I'll start using that. The way I'm going to put it this year is self-adapting, which is already a big achievement. Self-adapting software. This is a software that is able to modify itself based on incoming information from the market while it is trading the markets, actually. So it's already a huge achievement. And with all the AI, as all of us here know, this is just going to be better and better as we go forward. So personally, I've been trading the markets daily for 15 years. We also have a daily market review, which goes back years and years of video archives, so you can always check our work anytime. And our customer service, may I say, is legendary, and our customer success is what is most important for us. Except for the last year, I also taught for 6 years. I taught at the graduate level trading strategy design for an American, or at an American university stationed in Budapest. The campus is in Budapest, and incidentally, the university itself was founded by one of the most famous traders of all time. So I've been in this head to toe, the markets and designing software, before I started the Remek back in Budapest, I worked more than 10 years on a banking software project. So I've been into software and the markets for many, many years. So after all this introduction, I also like to mention that please feel free to type in any questions as we move forward. I'm going to be building these columns that you can see on the right-hand side, one by one. So no need to wait till the end. If you want to ask anything, details, then please type it in. I'll try to keep an eye on the chat window. Now, Syed is already asking, do you have future derivative trading features in the US? I'm not sure if that is a question for me, Syed, but we trade the US futures markets, yes, but our software can trade anything that is in your data feed, any market and any asset class, any instrument. Let me know if that answers your question. All right, so let's move on. And before we start, I'd like to ask you, how many of you, let's say from 0 to 10 or 1 to 10, right? 1 to 10, 1 meaning brand new to NinjaTrader and Remek, and 10 seasoned NinjaTrader 8 user. I'd like to survey here the audience. Where would you place yourself on this spectrum? Okay, Perry's number 10. I'm happy to see that. Don is new to NinjaTrader. So my question is on NinjaTrader, actually, NinjaTrader 8, because that I'll try to make it easier depending on the audience to how much detail I might go into when we build these columns. Okay. All right. So there are some people who are new to Ninja, which is fantastic. I'll try not to complicate this very much. Just we only have about maybe 30 minutes to build this thing. So if you want to get more information, of course, you just have to head to remek.ca and sign up for the free membership, and you can watch all the videos. And actually, we also have a YouTube channel where you can watch some introductory videos. And if you ever get stuck, just send us an email. We'll be happy to move you forward. So thank you very much. So, right. Okay, I think we're ready to go. So first, oh, yes, I also would like to mention that last year's webinar with NinjaTrader, which was on May 18, 2023, this slideshow will be published in our blog maybe an hour after the presentation. So you'll be most welcome to click on these links. And if you want to check out last year's presentation, which was strictly about our strategies, then you will find them right here. Okay, so let's move forward quickly. So we're going to build a market scanner. And I understand there's thousands, or if not tens of thousands of market scanners out there. And of course, not of course, but I am going to make the claim that ours is special. I might even say that ours will be the only one you need. And I stand by that claim. And I hope that I'll be able to back up that, no doubt, very strong claim. But first, let's see what we're going to do here. So we're going to build 10 columns. 2 of them will be coming directly from NinjaTrader 8, quite simple, no complications. And we're going to be using 4 indicators from Remek. We have what we call the 9 essential Remek indicators that we think every trader should have on the desktop, if they're trading, of course, in the NinjaTrader universe. And the reason why we have 10 columns is because we're going to use some information, some different information, of course, from the same indicator twice. So there will be, some of our indicators provide various outputs, which we're going to use for certain purposes. And I'm going to go into that a little later. So 10 columns, and these are the indicators. These are the ingredients that we're going to use. Okay, now, just some general comments before I actually hop on to NinjaTrader. So what will this market scanner do? Okay, I'll try not to read everything because that would be very boring. So later you can please just refer to the slideshow and read the comments. But I'll try to just point out some basic facts here. First of all, when you use this market scanner, you can still open up the charts. That's perfectly fine. But the thing is, you don't have to, because, and I'm gonna show you how, but all the information, everything you need for your trading is actually in this one tabular format. And I can, if you ask me about 6E or 6J or ZB or whatever, I can talk about it for 5 minutes based on these numbers. So once you learn how to interpret these numbers, you will not actually have to open up the chart. You can still open it up, of course. But why is this good? Because numbers are objective. The information is quantified. It's not subjective. Everybody, all of us here are quite aware of looking at charts and be subject to cognitive biases, even visual illusions or optical illusions and subjective judgments and all the mistakes that we have ever done in the trading business on the charts over the years. And I'm sure everybody understands what those are. Now, however, quantifying information and easily assigning colors or short messages to them makes it much more objective and eliminates much of the cognitive risk that we are, well, actually subject to as human beings as we go about doing this business. All right. Now, further advantages of doing this way is, well, productivity, efficiency, and health. As we all know, sitting on a chair, especially intraday traders, 8 to 10 hours a day is anything but healthy. There's lots of data, proof, evidence out there. Everybody knows it's just not healthy, period. So we need to find some ways to be able to move around the house and still be able to do the job. Now, in these columns, it will be possible to, we'll be able to attach emails and sound messages. So all you need is a little earplug, a little Bluetooth, and you can be fixing the bicycle in the garage or making coffee in the kitchen. You will still know what's happening on 6J or ZB or NQ or whatever else is your fancy, or even ETFs or stocks, whatever is in your data feed. You can attach WAV files. You can even record your own voice and say, NQ is breaking out, something like that. And you can have a host of sound alarms. And if you happen to be passing through airports or gas stations or whatever, you can set up your emails so that you're never far away from your actual screen or the information that you need to make decisions. Okay, and right, further advantage. We are all aware of correlations. Let's just think of the indexes, for example, the ES, NQ, RTY, YM, although it's a little looser these days if you look at the YM and the RTY, but most of the time there's strong correlation, of course, between these markets and how they move. And by looking at this tabular format, you can see correlation and you can make decisions or just to get trade ideas much faster than looking at 3, 4, 5 charts. Often what happens is that one correlated market moves before the other. So let's say the energy markets, CL, HO, RB are strongly correlated. Maybe the CL moves. Well, you might be late for the CL trade, but RB and HO haven't moved yet. So same thing with the precious metal market or the treasuries market. There's certain but well-defined important advantages of understanding and taking advantage of correlations. And this tabular format makes it much easier than looking at 3, 4 charts and trying to figure out what's going on. All right, the next big advantage, we standardize risk and price movement. And I try to give you, first of all, just a little, I'm not a statistician by profession myself, so I do understand if there's any statistician in the room, please forgive me. I do understand there is a difference technically between standardization and normalization in statistics. I was trying not to go down that route because then we'd be sitting here 2 hours later. So I'm going to call everything just standardization. But the idea is that we bring disparate, which means information that is not easily or just cannot be compared. We're going to try a common platform, a standard, a conformity, so that we can compare information that would be otherwise, if compared, it would be misleading. Let me give you an example. Let's say instrument A moved 20 ticks today. And then instrument B moved 200 ticks today. And of course, our first reaction is, wow, B had a crazy day. Well, not so fast, because maybe B moves 200 ticks every day. So for B, it was a boring market just like any other. However, if A tends to move 150 ticks every day or daily on average, and today it moved 20, there's such an extreme volatility compression that which is going to burst one day, one way or the other, sooner or later, which is important information for us. So we need to find a way to standardize these measurement units. And here, right here at the bottom, standardization allows us to compare, well, it's not scientific, but I'm just using this comparison here, apples to oranges, so things that are not easy to compare otherwise. For example, you might say that, what if I say instrument A moved 2.5 standard deviations, but instrument B moved 4.5 standard deviations? So I'm not counting in ticks, I'm not counting, certainly not in US dollars, I'm not counting in, I don't know, not even percentages. Standard deviations or ATRs also are the best way to compare movements between markets. So this numeric quantitative data in these charts, in these columns, are all standardized, which means if you look at the RC, we're going to go into the details, but when you see this is 706 and the other one is 1500 something, then you know it's twice as much. There's no distortion. Okay, so I think I drove that message home pretty well. Let's see what else is here. This table will tell you all the important phases of price action, which means it's not just the signal, the actual trigger that you will be notified of, which is the ideal candle to engage with the market, on which to engage with the market. It will also notify you of events leading up to the potential trigger. One of them is, I'll go into all the details, but now I'm just mentioning the setup phase. The setup is the last step before the trigger is expected to arrive. And depending on the time frame, by the way, you can use this on any time frame. We have a video where all these tabular charts, the whole market scanner Pro is used on a 1-minute chart. It's somewhere on YouTube. You can check it out. Things move fast, but things move pretty okay. Or you can use it the way that I'm going to show you just for presentation purposes, which will be on the 4-hour chart and the daily chart, a little slower, but the time frame will be completely up to you. All right, so identifies setups and triggers and all the other important phases of price action. So what's the point? You always know what's happening without having to look at the charts. Actually, on our website, if you go to the blog, remek.ca/blog, you can already see a free version of this in an Excel chart. So you might be at an airport, you just have to go to the remek.ca website to see these standardized information already. All right, and last but not least, when eventually the signal comes, the trigger comes, well, we don't just have to sit there and watch the trade go by. We can actually execute the trade with our strategies automatically or manually or semi-automatically in a discretionary fashion using any of our 3 strategies, Pro, STR, BT, or BTX. So there's lots of stuff here, and you can always dig deeper and visit our website and watch our videos for more. Let's move on. And just one last piece of the puzzle here I'd like to highlight. Those of us who know our work at Remek, they've seen this a million times before. But what is the idea? Why these columns? Why this information? Why not something else? There is a reason for that. Every piece of information is there for a reason, and no column is wasted, and there's no further columns because we don't really need more. We have everything, and these will be the indicators here. You'll be able to click on these links, by the way, later in the slideshow if you'd like to visit and learn about these indicators exactly. But looking at the chart, all right, so here we go. The red The red color shows a typical movement of the market in a trending environment. And we will be looking for trending environments. As everybody knows, at certain stages in the trend, there will be some consolidation. Just think of, and that's not just true for the financial market, just think of the real estate market. When house prices go up, well, they don't go up in a straight line, and everybody who maybe hasn't bought yet but wants to buy might be looking for a little pause. I don't want to buy at the top. Well, what are those people are looking for? Actually, they're looking for a pullback in house prices. Might even be true for other markets, the potato market or the car market or whatever, but this is just normal human behavior. This has been going on for tens of thousands of years. You can go back to history and research. This behavior has been pretty stable, not very likely to go away, not in our lifetime anyway, although nobody knows the future. But this behavior, the yellow meaning the consolidation areas, which could be horizontal, by the way, doesn't have to be sloping backwards. And the white area will be, well, the green first. The green is what we call the reemergence of momentum. The green area is where we do want to engage with the market. And it's, if everything goes well, the white area is that little piece. You see, when we go to a restaurant, we don't want to buy the restaurant. We just want to have something to eat. As traders, we just want to have a piece of the action. This white is our trade in ideal situations. Of course, there will be sideways markets and losing trades, part of the deal, but this is what we're aiming for, right? So red is a typical behavior of the market. Yellow is these pauses in the action where people said enough is enough. Now I'm going to wait a little bit, see if I can get a better price. This kind of thinking over tens of thousands of people will create these consolidation areas, popularly called pullbacks. But I'm reluctant to use the word pullback because there's so many details here that it's easy to get lost, or just to focus on this one word and think, oh, it's just another pullback guy. Well, if it's just another pullback guy, then why is not everybody? Why are we in this room talking about it? Pullback trading or consolidation trading is not any easier than any other form of trading. The only advantage probably that I might cite here is the relative stability of this pattern, because if you go back to Dutch Tulip Mania or the East India Company, all these old records, even Dow Jones, 130 years now, US stock market records data is available for research. This has been pretty stable. It's a characteristic of the market. Why? Because the market is nothing but a crowd of people doing stuff, and the crowd of people will display crowd behavior. They can't even help it. They're not even conscious of it. It will just surface. And this is what we're trying to take advantage of. And our software was built to capture these situations as effectively as possible. All right, so I hope that picture is pretty clear. And right, last thing, the time frame. It can be any time frame. I'm going to show you one example for a time frame, but if you want to do your testing or your trading activities on a 5-minute chart or a 1,000-tick chart or I don't know, volume chart or a minute chart of any sort, of course, the software was built to be ready for you any way you want to use it. So the time frame will be up to you. It can be a range chart, of course. Actually, sure, many traders trade range charts, and for good reason. And let's see. The last thing I think I mentioned this already. None of these columns are there just for fun. It is there for a certain reason. And once you get to know our work, you will see that this all fits into a rigorous, evidence-based, quantitatively driven methodology. And quantitative data can be seen on our YouTube channel, so you're always welcome to visit those videos. And last but not least, this is what the same data is displayed in an Excel chart on the website. So you can always see what's going on anytime just by visiting the website. All right, so that comes later, the specials and everything. So I think this is now time to actually get down to business. So let's roll up our sleeves, and we have a few minutes to do this. I'm running a little late, but let's jump right in. So here's the deal. This chart, this market analyzer on the right is the finished product. This is the starting point. All right, so this is what we're going to end up with. I have saved certain templates, so just to save time. But again, if you have questions, or if you're new to this, then we can have another meeting or a webinar in a few days on the Remek platform and discuss this further. But right now, I just want to walk you through this. And why do I have the two charts? Not because we need them, but because I might want to point situations out for you visually, which will be displayed here quantitatively. All right, so let me just leave these two charts on the left. We'll use them, or we'll just look at them when we want to. Otherwise, they don't really matter, because what we're doing here is just quantitative data. All right, so step number one, I want to monitor a certain list of instruments. This can be anything, and it could be any asset class depending on the data feed. Again, it could be futures, ETFs, stocks, whatever you want, Forex, up to you. In this case, we're just looking at futures. Okay, so this is a list. It is 20 some instruments, my usual list, and it's very easy. Most of you will know this. I have saved the template. So this is NT-webinar start. It just loads the instruments. And if you look at the next column here, day, now what do I want here? We mentioned that the first two columns come from Ninja. So obviously the instrument list comes from NinjaTrader. And the days means days left until the rollover. And that's important information for us if we trade futures contracts. Obviously, if the contract expires in 1 day, I need to know that fact before I put on a trade. Okay, so this is the number of days till the next rollover. And I saved this already. So all I need to do is just double click on this day column, and that will load the second day. And you will notice, and I left it here on purpose, because you will notice that some of these are yellow and some of these are negative numbers. And what will happen, of course, nothing new for most of us. Yes, Jimmy, of course, you can choose any instrument you want. You can delete instruments, you can add instruments. You can see that you can create a new tab for micros or anything else you want. Yes, and as you've just seen, you can save important information pre-saved in a template. So next time you just have to load it. So here we go. I loaded the days, and the point I wanted to make is that, of course, some of them are yellow and negative numbers. That just means that that contract expired. And if I just hop onto my control center, then everybody knows what I need to do now. I need to just go to database management and rollover, update the contracts. And then the yellows will disappear. And the current contract, for example, you see the contracts for each instrument, the current contract will become part of the table. All right, now I might as well show this to you. So there's a little trick here. There's lots of little tricks, useful tricks in NinjaTrader. The more you use it, the more you will get to like it. Here's one. For example, I want to save the day, just this template, but I want to save the latest instruments. Then just click on Save Instruments, save the template, and if I load, then those yellows will not come back because now I have the latest version. Of course, it's no big deal, but just a neat trick that we can use here. All right, let's move forward. And as you see, the next column in the finished product will be RRR. RRR is one of our most important indicators out of the 9 essential indicators. Remek relative returns. That means one of the indicators where we measure price movements in standard deviation, which means that these numbers here, I mean, just a reminder, if I say 10 ticks on the 6E or 10 ticks on PL or 10 ticks on ZN, these are those tick is not a comparable measurement unit. There's nothing wrong with ticks, of course. It's just not comparable because I'm comparing an ant to an elephant. What is a big jump to an ant is nothing to an elephant. So instruments behave differently. The only way we can compare movement, actual volatility across instruments is by converting movement to standard deviation. This is what R does. So here we go. And we have some color schemes here, which means many of you will know that anything above 2 standard deviations, or actually in this indicator less than -2, is an extreme move to the upside or an extreme move to the downside, which means, just in simple English, unusual, very unusual behavior. Imagine like you have a child jumping on the trampoline, and every day the child jumps on the trampoline, and then next day it just jumps 10 times bigger. There's something happened to that child. It's an unusual behavior. This is what this unusual behavior will be measured quantitatively and objectively for us here. And you can see that on platinum today, actually it's the close of yesterday, because I run this on the daily time frame. You're free to run it on a whatever chart you want to run it on. The daily time frame makes sense to me. So you see that if you ask me what did platinum do yesterday, I can tell you without opening up a chart. Platinum had a 255 standard deviation move yesterday. Let's click on it and let's check it out, what it looks like, what that kind of thing or movement looks like on the chart. And here's what it looks like, this big green bar. That was the up move. Okay, so this is how it works. So what I'm going to do now, I'm just going to load the third column. Here we go. So now we're going to have the RRR, double click. And now I know any instrument makes an unusual move to the upside, to the downside, measured objectively, I will know about it. Also, if it's not unusual, then it will not be colored in this scheme the way I set it up for myself. And also, please note, sometimes you look at a chart and you say, oh, that's kind of big, but in standard deviation, it's nothing. You have to believe the objective measurement unit, the standard deviation. So we don't believe your eyes. Our eyes are very much influenced by the neighboring candles. All right. And it's not always objective. I'm not saying that we're totally wrong all the time, but we are subject to our biases, cognitive biases. And this is what is eliminated here. All right, let's move forward quickly. We have about maybe 10 minutes. I'll try to finish this and then I'll open it up for 5-10 minutes questions. So let's move quickly to the next column, which is rib. That just means Remek inside bar. Now, everybody knows what is an inside bar. So you might ask, okay, what's the big deal about inside bar? Well, we want to identify, first of all, long tails, up or down. LT means long tails, and they will be identified for us by the machine, with the machine, without having to open up the chart. So if you ask me, there was a long tail yesterday on the 6A. Did I have to open up the chart? No. The long tail is right here, and all the other markets. Now that compared or combined with some other information can already get us interested in engaging with certain instruments. Long tails, as we know, up or down, often indicate momentum, especially on a larger time frame, let's say the daily, when there's a large crowd, one way or the other made some decisions about where price should be going. And the tail often is a visual expression of that bias or feeling of the crowd of where they want to take this market. Long story short, we have the long tail. In the rib, we also have another function, which I don't have an example for it right now because this is real time, but we have not just the long tail, but of course, we also identify the inside bars. If you look at the conditions, and let me use this just to show you quickly how these color schemes are set up. We have a numeric code, and then we attach a message in English, or double inside bar, basically what it means, long tail, inside bar long tail on the same candle. That's an interesting situation. And double inside bar long tail. So all these situations which are, to us momentum traders, are potentially important will be automatically identified for us. I don't have to do anything. It will be here. All right, long story short, I'm just going to move to the next column. And I'm not going to spend too much time on the hot zones, but maybe just one moment. And the hot zone is one of the columns that actually also comes from the triple R. So that's why we have 10 columns, but 4 indicators. The hot zone is an interesting and very useful statistically. I have found, or we have found, a strong evidence that it can be part of a trader's edge. Let me show you what the hot zones are. So actually, I already have it here. So let's look at this daily chart. And you will see that some of the background is shaded. And we have this indicator, the triple R indicator, which converts volatility into standard deviation, remember? And what is the hot zone? The hot zone is basically the first. I must emphasize, nothing in trading ever works 100%. So if you find something that didn't work out, I'm more than happy to be the first one who will show that to you, because never ever will an indicator or any mathematical calculation, however sound the concept is, will provide 100% accuracy. That's just not possible. In trading, we always work with probabilities. Having said that, let me point out for you something here. Let's see how does that work? Here we go. Oh, let me just try to draw a rectangle here. So this is here a hot zone to the downside. And that starts when this indicator crosses over zero and spends time below zero. The first pullback in the hot zone is a serious opportunity for us. All right. And look, it did work. So price went the way we expected. Same thing. There's another one. I could probably find 20, but I don't want to bore you with all the positive results, because I can find probably one which didn't work. But look at this. Blue hot zone, which means bullish hot zone, crossover, first pullback after the crossover. Look what happened. This is what happened. Another hot zone, and then I'll stop. Here we go. Blue hot zone, first pullback in the hot zone. Well, didn't go very far, but at least a 1R was there. So this is what the hot zone means. And this column here, HZ, points out on any number of markets, anytime, without having to open up the chart, if there's a bullish or bearish hot zone in the works right now. That will be serious information for me as a momentum trader. All right, let me move to the next column, and then I'm going to stop and read the messages. Give me 1 second, please. The next column will be KSZ, which is the Keltner score. Many famous traders use this metric, so I don't claim to have invented it, but I know what to use. I know where to turn when something makes sense. So we adapted the concept. The concept is very simple. The KSC simply shows you, let's suppose I don't have these charts, okay? Oh, let me just, I'll put these charts in the corner. I don't know what's happening on the GC, I don't remember. But if you ask me, where is price on GC right now? This is, for me, this is a daily candle, but you can put it on a 2-minute chart, it doesn't matter. It will do the same job. But if you ask me, where is price on GC at this moment on a daily candle, or where is price on corn at this moment on a daily candle, I will be able to tell you, and you will be too if you have this tool. Look at this. Anything less than -1 means price is outside the lower Keltner. Outside the lower Keltner. Now, for us, that is already information that we want. Here's price. I should do it the other way. So this is a Keltner channel let's say, and outside the lower Keltner, price is here. 1.3, less than -1, it's outside. Well, it got here one way or the other. And what does price tend to do next? It tends to go back inside, and this is what we call a bear flag. So if you ask me if I know about with high likelihood, of course, no 100% accuracy is possible, but with high likelihood, I know about a bear flag before the bear flag happens, then my answer is yes. And you will too, if you know how to use this tool, and if you have this tool. 1.3 means that soon we're going to have a bear flag. And then after the bear flag, we might have a potential trigger, but that's another story. You see? So this is how we track the various stages of price evolution with our market scanner. Okay, so let's see. Trying to keep time here. The next, you know what? Let me just stop here and read the questions because, okay. Right. Don, thank you for the excellent question. Please remember, I'm not talking about normal distribution. On financial markets, price action, price data is not normally distributed, and returns are not normally distributed. So standard deviation is a measurement unit, but I'm not making claim that the curve is normal distribution. Actually, we are well aware of fat tails. That's exactly one of the things that we trade is fat tails. What we are looking for is extreme positions in price. That's what the KSC, the Keltner score, exactly does. I'm looking for extremes. The triple R is looking for extremes. I'm not looking for average, normal, customary price action. Having said that, I must make sure, I must be upfront. I'm not a statistician, so if you know more, probably you know 100 times more. I know what is needed for my job, but I know there's 20 books on my bookshelves that I still have to read through. Okay, but I'm not saying it's a normal distribution. I'm not saying it's a Gaussian curve. I'm just saying that we're using standard deviations to measure price action so that we can compare two things which the tick or dollar figures would not be a good standardized unit of measurement. Okay, great question. Thank you. All right, so let's finish this off. Let's see, 1, 2, 3, 4. Okay, so the next two, setup and signal, will be coming from our main indicator. So two pieces of information coming from the same indicator. Again, setup is popular. Let me just make it short. Okay, it's the bear flag and the bull flag. That's it. Short is a bear flag, long is a bull flag. Certain criteria, we have our proprietary ways of doing these things. So, and we believe in what we do. So when you see this, you know what's going on. And we can hop on the PL and you will be looking at a bull flag. And please note, our setup column is a 4-hour chart. And here is your bull flag on a 4-hour chart. 240 minutes, this is the bull flag. And I knew this before. The same thing on the YM, or same, pick any instrument you want. Here's the New Zealand dollar. We don't look at it too often. There is a bear flag on the 4-hour chart right here, ready to trigger. Okay, of course it's 5 o'clock, but this is a viable opportunity coming up. I understand that there's a time frame conflict, so we could talk about the details here, but that's another subject. So this is how that works. And the next one will be the actual trigger, which means in our quantitative mathematical calculations, the objectively identified ideal candle to engage with the markets. That's what our trigger is. Not a guess, not a hunch, not a feeling. It's a mathematical reality. And that when comes, here we go, signal. Right now, there is a short signal on the 4-hour Swiss franc chart. The market is closed, so probably I was expecting a short red arrow here. I don't have it here, and I could investigate, but bear with me, please. This would be here probably if the market would be open, but we'll see when the candle closes, the next candle. There's another one on the HG, for example. So look at this 4-hour chart. As soon as it comes up, again, I'm assuming that it's because the market is closed, but the bear flag is here nonetheless, and we're ready to go short. This is the trigger. All right, 2 more columns quickly. We're 45 minutes, so I'm so sorry we're running out of time here. RRS, I'll just load it and tell you in one sentence what it is. Then you can find all the details on our website. RRS is admittedly for longer term traders. RRS, you will quickly notice that the ES is 100. The MBT Bitcoin, for example, is 138. And some measures, some numbers are, look at this 57, ZC, corn 57. What does this mean? It means that if 1 year ago, you would, if you had put $100 into the ES 1 year ago, then of course it would be, you're comparing apple to an apple. That's 100. ES is the instrument or the asset that you're comparing returns to. If you had put the same money in Bitcoin, you would have 38% more profit. And it was not a good idea 1 year ago to put your money in corn. So this is a return compared to the S&P 500. Well, technically the ES, but for our practical purposes, it's just like the S&P. And you know where the money, which was the best asset to put the money in. Of course, this is in hindsight. But please note, some of these trends can be long-term, and currencies, for example, are capable of long runs, as are energies. So I think it makes sense. This is obviously a bit more long-term asset allocation, but I just wanted to show you this example that it's not, you know, our life doesn't have to revolve around the 5-minute chart. There's other resources that we might want to deploy or considerations that we might want to consider. Okay, last but not least, certainly not least, actually, this is our most powerful indicator, is the Remek converter. And I'll finish this off here quickly, but please note, you really should go to, please, I ask you to go to our videos and our textual documentation of the Remek converter. That's our most advanced, most fantastic indicator, which, what does it do? It compares, actually, it converts volatility into US dollars. Volatility into US dollars. And it's not as simple as you might think. Actually, what you see here on our charts is the Remek converter indicator version, indicator format. And you say that you see here that 1 ATR on this chart, which is the RB 4-hour chart, 1 ATR is 874 USD. How on earth would I know that? Would I be able to calculate that if I didn't have that indicator? But that's crucial information for me, because when I go long, I need to reckon with, well, first of all, and I'm 1 minute and I'm done with this, the distance between the midline, Keltner, and the edge is 2.5 ATRs. If I go along here, well, I need this type of, sorry, a little slow. I need this type of stop, which is about 2.5 ATRs. So at each trade, I must know what is 2.5 ATRs in dollars, and I must know if I have enough money for that. If you use BT in brackets, then this is done for you automatically. That's the beauty of BT. But there's also one more neat thing here with the converter. This is 1 ATR. But what if I want 2.5 ATRs and I don't want to do the multiplication while I trade? You simply change the 1 to 2.5. And now you will know that it's $2,180. And you can change it to a 60-minute chart or a tick chart or any type of chart. Converter will do the calculation for you instantly, 819 USD. This is impossible to calculate, especially in the heat of the battle. So converter is a godsend, is one of our favorite indicators. And also, if you look at this list, in the meantime, it's displayed here, you'll see the real risk. I'm so often surprised that when people tell me they're trading the NQ, And then, of course, they tell me the account size, and I say, wow, it's like walking on thin ice. Are you aware that actually the NQ is one of the, if not often, the most risky instrument to trade? And for example, the Australian dollar or the New Zealand dollar is one of the least risky. And people don't know because they don't know how to compare risk to risk. Remek converter does the job for us. So I'll stop right here, 50 minutes, and I apologize for running out of time a little bit. I quickly want to ask you if you have any questions, if Chris can allow us for 5 minutes max, just to answer any questions. Don, I'm not using level 2 data. No, I don't. We don't really use level 2 data. Okay, in the meantime, I just want to update my database so I can get rid of these old expired contracts. Here we go. Okay, so thank you, Chris. And so please type in any questions that you may want to ask, or that maybe I forgot to mention, or which was perhaps not clear. So this is one of my favorite topics. We really put in many years into this, and I could go on for another day, so I can get carried away easily. I'm passionate about this and our work in general, and I encourage you to check us out in detail and send us an email if you have any questions. How can you use this in conjunction with my trading methodology? Well, Jacob, I don't know what your trading methodology is, but if you want to adopt what we do, then all you need to do is get one of our strategies. I would encourage you to get all three. If we hop on the website, I might be able to show it to you. So we have a store here. Give me a second right here. And feel free to, first of all, join our membership, you see, so you can become, join our mailing list, get the free trial, become a member. And then you'll get by email, you'll get all the instructions as to how you can learn more about us and how you can put this information and this method into your trading, part of your trading. This is our shop. Here's our strategies, but that's just the shop. I should show you the solutions page, which is where the 9 essential indicators and the actual 3 trading strategies, and they were built for specific purposes, but I'm not going to go into that. That's another webinar, but please feel free to read more about this. Much of this material is available without even signing up for a free membership, but to really get into it, sign up for a free membership on my account, and then you'll get the access to all the material that you will ever need. So I hope that answers the question. Last but not least, please let me show you our little special here for this special day with NinjaTrader. So Market Scanner Pro, what we built here with the 6 indicators and all the know-how is available as a ready-to-go product in our shop. So please feel free to click here. This will be published in our blog quite soon with the links intact. So visit our store and use this coupon code in the store for a substantial discount on the weekend, this weekend only. Also, please get on our mailing list. All these links are clickable here, and get the software, the free trial, the strategies, and you'll get all the information about how to adapt this methodology and how to use it in your own trading. So actually the coupon code is of course good for the Market Scanner Pro, but I must mention here, please note this last thing. The Market Scanner Pro is included with the 3 strategies. So if you buy the 3 strategies, let me show it to you. If you buy any of these 3 strategies, the solutions, 1, 2, 3, then you don't need to buy the Market Scanner Pro, please, because it's included. The Market Scanner Pro is a much more humble price, let's put it that way. It's a lower price. You don't get the whole package the whole algorithmic power of the strategies, you get this tabular format Market Scanner Pro. This is what it's called. All right. But if you do decide to get the full-blown strategies, or especially the 3-pack, that's the best price. Look at that. I'm not logged in Firefox. Sorry. Okay, we'll do that next time. Then the Market Scanner Pro will be included. So just to repeat, if you decide to buy the strategies, which is, I think, the way to go, then the Market Scanner Pro is included. Well, yes, you need to understand the indicators, Jacob, and you can understand the indicators because all the information is on the website. This is just a quick webinar. We could spend another hour talking about each indicator in itself. Okay, and John is asking, are 3 indicators 500 or 5,000? What do you mean 3 indicators? The 3 strategies you mean? Sorry. Oops, sorry, did I? Yeah, okay. Give me one moment, John. Let me just hop on the website again here. So we have 3 strategies, and they've been discussed many, many times, and I'm more than happy to go into detail or write to me an email, but we have videos about this. 3 strategies, each serving a special purpose, same methodology. You will understand, I promise to you, if you just watch the videos, why we have 3, why not 7, why not 2, why exactly 3? There's a reason for that. Now, the 3, you can, okay, I'm going to open up my Chrome because, sorry, a little hiccup here with the passwords. Okay, let me just show you the 3 strategies. Okay, here we go. So the 3 strategies, if you get them all 3, then of course you get a better price. This is the individual price. If you head to the store, then there is a 3-pack. And like with all 3-packs and stuff like that, you can just go with the 3-pack for one easy price. Let me mention that the code that is on our coupon code right here works on the 3-pack too. So we didn't want to worry about the details. So any product you want to use it, here we go. This code also works for the 3-pack. Let me know if there's any other questions. And again, thank you, Chris, for your patience. And I'll stop right here, almost 60 minutes. If there's any other questions, please send me an email here, support@remek.ca. I'll be at the machine and I'll be more than welcome to continue. So thank you very much again. It's been a real pleasure to be here, and I thank you for the opportunity. And please feel free to check out our products and dig in a little deeper into how we do what we do. Thank you very much. What will be the discounted price for 3 strategies? John, please put these strategies, whatever product you want to buy, put it in the basket, type in the coupon code, and you will not have to pay yet. The website will tell you the discount, and then it will do the calculation. It's a steep discount. I encourage you to try the coupon code. Put the stuff, whatever you want from the store, in the basket, and then type in the coupon code and hit apply coupon, and the math will be done. If you run into any problems, please just send me an email. I'll be more than happy to make sure everything goes smoothly. Thank you very much, Chris, and I'll hand it over to you. Thank you.
Thanks again, Frank, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of Remek Trading Systems and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.